Welcome back, all you wonderful candidates. Time to run through some multiple choice questions. We've got related party transactions. Starting off here, on March 1st of the previous year, a parent sold stock with a cost of $8,000 to a child for $6,000, its fair market value. On September 30th of the current year, the child sold the same stock for $7,000 to Hancock, who was unrelated to the parent and child. So might as well just be on the open market there. What is the proper treatment for these transactions? Great question. Let's run through it. Let's recognize and remember our rules that we've gone through. Now, when a family member sells property to another family member at a loss, we remember that the IRS disallows the recognition of that loss for tax purposes, which makes sense. We understand the rationale behind that, right? We don't want any family members trying to recognize losses by collaborating with each other. And, well, what happened? Their stock, parent stock, was at a cost of 8. They sold it to their child. It was $6,000. So this would be a $2,000 loss, but that is disallowed by the IRS. So don't do that. Sell it on the open market, be able to recognize that loss. Additionally, the basis for this stock here, for this child, is going to be the same as their purchase price, which is $6,000. So when the child sells the stock to an unrelated party of $7,000, the child is going to have a $1,000 gain. But, however, since the loss from the parent sale was disallowed, the IRS is going to reduce the child's gain by the amount of the disallowed loss. So we see what's going on there and why. What happens? So even though the parent had the loss here and it was disallowed, it's not permanently disallowed. It's not disallowed forever. It is going to be carried forward into the future. Now, there's a lot of examples, whether it's depreciation or related party transactions. There's many times throughout the entire exam, or even capital losses, passive losses, where losses will be disallowed and have to be carried forward to some point in the future. Sometimes, in very rare cases, those losses could be completely eliminated and you'll lose them forever. But in this case, it just gets carried forward into the future. So it's as if this is one party. So, right? Related parties, it's as if the parent and the child are the same party. So the original loss that the parent had but could not recognize, that's going to get carried forward, and then it's going to knock out the gain. Remember, we don't want recognized gains, right? Because recognized gains you get taxed on. So $2,000 of disallowed loss. The child's new basis would have been $6,000. Child sells it for $7,000, so the child would have had a recognized gain of $1,000. But because we carry forward the parent's loss, we would have that $1,000 would knock that out, and the remaining $1,000, because it was originally $2,000, we could take that as a capital loss. Leaving us, final answer here is going to be letter B. We have the parent with a $0 recognized loss and a child with a $0 recognized gain. And again, we would have an additional $1,000 to deduct. That's it. Moving forward, knocking out the next one. All right. And I'm just going to, we look at it overall. Okay, this is one of those questions where what amount does this sister constructively own of Bank Corp's voting stock? We're going to do our fun little process of taking a look at company and all of the individuals, their relationships with each other, and how much they own. So this Bank Corp's voting stock is owned by the following individuals. We've got Farber. Farber owns 25%. Farber's mother owns 15%. Farber's father 40%. And Grosset, an unrelated person, owns 20%. Farber's sister sold equipment to bank at a loss. Okay, well, this is bringing in a lot of different rules that we potentially have. And, well, what's going on? We've got, first we need to understand, is this, obviously this is a lot of stock. This is a lot of ownership, and it's probably going to go well into the fact that, this might be quite disallowed, but we're not even dealing with what amount could be disallowed. We're just straight up saying, what amount does the sister constructively own? So then, in other questions, we could consider what amount of this is disallowed because sold it at a loss. So for the purposes of determining whether the sister's loss is deductible under related party rules, what percentage of bank stock, if any, does the sister constructively own? And how are we going to do that? Well, first, we are going to look at everything. We're going to look at, because these people are all related, we're all immediate family, we're recollecting those rules. So we've got Farber's sister. Brother-sister is definitely going to be, considered related. And Farber doesn't own any, but Farber's considered owning 25 plus 15 because, well, guess what? It's Farber's sister's mother as well, plus 40. We're going to add those all together. That is going to get us to an amount of 80%. That's going to be our final answer here is 80%. The sister is considered constructively owning 80%, even though she doesn't own anything, because the immediate family members own that. It's as if she still has control, and as such, 80% is the amount. We would then go on, it's not like we're given a dollar amount of her loss, but we would then go on to possibly disallow that loss. There we go. That was our final question. Keep powering through. You got this. Study up, stay strong, and I'll see you in the next one. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.